Okay, traders, welcome back to the Price Action Labs YouTube channel. We're going to be going over price action secrets. In particular, we're going to be going over what is wrong with the left image and what is right about the right image. Now, the truth is, when you are trading this particular strategy, it's important to understand that we are going to be using both the order flow and the candlestick chart to give us our overall analysis. So this is a trade you could have taken in the PM session on Monday the 24th. I only trade the AM session, but I'm going to show you how you can trade both the AM and the PM session in conjunction using ICT and order flow concept. So the main thing you want to understand is in order for you to catch this move to the downside, you need to understand what's going on over here on the left, right? But let's break things down in terms of ICT concepts to begin with, right? So here we are on the 15-minute time frame, right, using the PO3 indicator. So what we're looking at, right, we're looking at, of course, if we just head up to the higher time frames, what are the higher time frames actually showing us in terms of structure, right? Let's break this down. So when we look at things in terms of structure, what we're seeing over here is we're seeing a very, very basic structural low and a structural high over here, right? Now from here, we didn't have a break. So what this means is our structural low is down here and our structural high is over here. Now, when we look at more recent price action, what we're seeing is we're seeing this trend line forming over here. And we're also seeing some imbalance forming over here. So we're seeing some kind of a fair value gap resting here in this region, right? So of course, for this particular day on Monday, the bias was bearish, right? So I had a bearish bias and I wanted price to come into this area below this 50%, right? This is what my overall higher time frame bias was. Now from here, when we go to the 15-minute time frame, this is where we can begin to use very, very basic ICT concepts. So what we have over here is quite interesting, right? I want traders to break this down in terms of very, very basic fair value gaps, right? So let's just take things back and understand things from an Asian session range perspective. Now, we've taken out the Asian range low like this. So price has given us a sweep of the Asian range low. Oh, beg your pardon, right? We've taken out a sweep of the Asian range low. The Asian range low here has been swept. So this is what we call manipulation phase one. This is the market enticing early sellers into the market, right? This is what we call manipulation phase one. Now from here, we have manipulation phase two. Now, what's really interesting about this, when we kind of dive into the price action, we had a fair value gap just over here. So this is our imbalance, right? I want traders to understand how I mark up fair value gaps because I get a lot of questions on this. So we always look for the one candle that comes before the imbalance. This is going to be our point of interest or our order block or whatever you want to call it, right? I use the word order block and fair value gap interchangeably, and I think that's what's confused people, right? This is the imbalance. This is the fair value gap. This is a POI or a key level. This is actually a demand area, right? This is an area of demand, right? So a demand area, quite simply, is just a bullish POI. It is a bullish area which is left in imbalance. So this is a demand area. So when we continue to play price on, right, we are looking for price and how it behaves in this region, right? It's quite interesting. So we had market open, which was very aggressive, and we broke with a body. This is what we call a demand to supply flip zone. So just to break this down in terms of liquidity, right? We had the Asian range low, price has taken out the Asian range low, price has now come up and taken out the Asian range high. So what does this mean from a price action or manipulation standpoint? It simply means that the market is looking to entice early buyers and take them out and then early sellers, take them out, then entice buyers, right? Both sides of the market have been swept like this. And so now we have what we call a demand to supply flip zone. So again, what makes this demand to supply flip zone valid is the fact that we've also left an imbalance just over here. So we can see an imbalance over here. So when price comes into this imbalance, right, we are typically looking for a few things. And this is where the order flow becomes very, very key. So we're looking for price to come into this area, tap into this fair value gap, and then we're looking for the interaction between buyers and sellers before taking price lower. This is important to understand. So now when we go down to let's go down to the 5-minute time frame, right? And now we bring up our PO3 indicator. So now we brought out our PO3 indicator. What's really happening down here is we had the 10 a.m. Eastern open down here. Now we got price coming above the 10 a.m. Eastern during the PM session, right? So now we're in the PM session and we're coming towards this level. So remember, when I'm marking out my trades, there's typically three things I look for. Only three things. We want to look for an M15 fair value gap or a demand to supply flip zone. We're looking for that fair value gap. That's very important. Then I want to see a lower time frame entry, either the 5-minute or the 1-minute. And then the most important thing is the order flow. So what happens is many traders don't quite understand what makes a top fair value gap. So we've been over it in terms of liquidity and in terms of supply and demand, right? You're waiting and you're being patient for the 1-minute or the 5-minute to enter, ideally above the 10 a.m. Eastern. Now, the order flow is why so many traders mess up, and we're going to be going over this in a lot of detail, right? But let's just break things down in terms of our step two. So step two, we want to see price enter on the 15-minute time frame. Sorry, on the 5-minute time frame, right? This is a 5-minute time frame, 5-minute chart. So what we're seeing is we're seeing price struggle to break higher. This is where the order flow becomes very, very handy because we are going to be reading this in terms of the buyers and the sellers. Let's go down to the 5-minute time frame. So on the 5-minute time frame, if we just kind of bring this up, we are going to be dissecting price action in this region. And it's very interesting because it's the same exact price action. But when we break this down in terms of the buyers and the sellers, what do we see, right? I want traders to look very, very specifically because it's only one candle which gave this away. It's this candle over here, right? We also had this candle over here. In fact, let's start with this candle. When we look at this candle carefully, it's really just a red candle, right? But we don't see the intricate details going on behind, right? So we have this red candle over here, but we have a lot of aggressive buyers over here, a lot of aggressive buyers over here, and we have a bunch of zeros up here. Like we had 8 for 160, 0 for 64, 0 for 98. So when you see a lot more aggressive buyers and sellers, what this indicates is that the aggressive buyers are trying to drive price higher, but this zone still held, right? The zone is all the way up here. When we go to the regular candlestick chart, it's this candle over here. It's the exact same candle. So what we're seeing in this kind of region is we are seeing a lot of aggressive buyers, right? We see a lot of aggressive buyers, right? And these aggressive buyers are trying to drive price higher, right? Do they succeed? Well, they don't succeed, right? Because the market is able to hold this level, right? So when the market comes back into this level, it's super interesting. I want traders to understand this candle. We see 112 for 1,000 or 1K just over here. We see 189 for 1K again. So we see a very, very large difference between the ask and the bid, right? The ask on the right hand side is the aggressive buyers. So we see a lot of aggressive buyers over here. We see a lot of aggressive buyers over here, right? None of them are rewarded, right? We also see a ton of aggressive buying over here as well before the market aggressively moves to the downside. But what we need to understand as a trader is we need to look at who is aggressive, right? Who is aggressive? If the buyers are aggressive, their only goal is to move price higher. So when we see aggressive buyers at a bearish fair value gap, right? Remember, we're at a bearish fair value gap, right? This is a bearish fair value gap. We have a lot of aggressive buyers in this region. The question is, right? What you need to understand is that the level itself holds. So when you see a lot of aggressive buyers and the level holds, what this means very simply is that the level itself is strong, right? This is what we call a strong level. Here we had lots of aggressive buyers and here we had lots of aggressive buyers, right? Despite that, the market was able to find an area of supply. Now, when we now look here on the 5-minute time frame, right? When we confirm our CISD or our change in state of delivery, this is a golden setup for me. This is a setup I like to use a lot, right? So we're above the 10 a.m. Eastern. We're way above the 10 a.m. Eastern. But what we had over here is really interesting. We had a 5-minute imbalance. I want traders to understand and see this. Now we had a 5-minute imbalance just over here. This is what confirms the CISD, right? This is the most important thing that confirms the CISD. We had a small imbalance over here, but what makes this zone valid is this candle and this candle. Also this candle as well. We had 3 candles which were our overall interesting zones. Now the reason for that is if we quickly bring this up, we actually saw a lot of aggressive buyers here. The zone was able to hold. We saw a lot of aggressive buyers over here. The zone was able to hold. And also we saw a ton of aggressive buyers coming in to fill this fair value gap, this particular candle over here. So here we saw a lot of aggressive buyers as well. Now these aggressive buyers have failed, and this is actually what confirms our CISD. Now when we have a bearish CISD like this, we simply want to put our stop loss. I wouldn't keep a stop loss this tight myself. I would give it a little bit of breathing room, give it to this wick over here. You can even give it all the way up to the level, but I'll keep it at this wick over here. Now from here, notice how we're selling above the 2 p.m. Eastern. This is the 2 p.m. Eastern. We're selling slightly above that. Now from here, where do we look to target? Well, our overall target will be the first kind of low down here. So we're looking to target the lows from the overall previous session, right? This is important to understand. Okay, so that's kind of a quick trade recap as to how you can trade kind of the CISD correctly with order flow and ICT concepts. If you like this video, give it a like, give it a thumbs up, and I look forward to seeing all of you in the next one.